de mettre sur mute à chaque fois.
Good day, everyone. My name is Matthew Curtin. I'm a Deputy Head of Communications at Scope Group, and I have the pleasure of welcoming you all to the Scope Ratings webinar. Our topic today is the outlook for the European telecom sector and the complex forces influencing management decisions and investors' portfolios. How strong is growth going to be? The possibly exaggerated challenge of investment in new infrastructure and the allure of M&A. With me to discuss these issues and more are Jacques de Greling, Director and Head of Telecommunications Research at Scope Ratings in our corporate ratings department, and Thomas Langlet, Director and Analyst in Corporate Ratings. Great to have you here with us, Jacques and Thomas. Before we kick off, I'm just going to do a little bit of housekeeping here. First, to remind you that if you do have questions during the webinar, you'll see on the bottom of your screen on the right a questions tab where you can ask them, and we'll get to your questions as soon as we've finished our discussion, and we will be distributing the slides to the presentation afterwards, so you've got those in the bag. So with that out of the way, let me put my first question to Jacques. Telecoms executives in Europe are good at talking up revenue growth for the sector, but for some time now, the region's operators have struggled to grow the top line. Why is that, and why might it change?
Thank you, Matthew. To give some background about the underlying trend of the sector, let's look at one of the trend-setting market in Europe, which is Sweden, where it got very reliable data, by the way. And you've got under your eyes a chart where you see in orange the rate of revenue growth in telecoms in Sweden over the last 22 years. And you can see that it moved dramatically at the end of the cycle 2000, the bubble, and it has been remaining around or close to 0%. In fact, Sweden was the first market in second half of 2003 to record a decline in telecom revenue. It was the first time ever in a Western country, and the reason was mobile revenue was going negative, a huge change in underlying trend. And in the following 10 years, this trend of moving to zero or meaningless growth was repeated in all European markets. Over the period, average growth in telecom revenues in Sweden was just 0.5%. while GDP displayed an annual growth of 2.1%. So it gives you a clear background of what's an underlying trend. And we can see also the cyclicality of the telecom service, notably in 2009 and in 2020, again with COVID crisis. This is important for a player with a good market share in this mature market, as it means cash flow stability. And in this trend-setting market, I would like also to point that we haven't seen any changes in Sweden recently, i.e. no return to growth, as that's an important feature. Lastly, also, I would like to point that the GDP growth displayed there, the blue line, is real GDP, i.e. with no inflation included. With inflation, the contrast between telecom revenue and economic growth would be even higher.
Jacques, that's interesting you mentioned inflation there, because that's possibly one way we might see growth in the future. I mean, price increases and indexing price increases to inflation can be one way for companies to keep the top line growing. Is that something that operators in Europe are looking at, and might it help?
I'll take over on this one, Matthew. So just to give a little bit of background on the telco market in Europe. So as most of you know, telco market is quite mature market with a fierce competition between players in every country in Europe. So it means that because of this fierce competition, the pricing power is quite limited. So what we have seen over the past years is that the growth of revenue has been driven by the capacity of some operator, some MNO to gain new customer and at the same time minimize churn rate. So that's the first point. So basically, the way to grow the top line is driven by the volume and not the price. And most of the time, when you attract new customer, it means that they are shifting from your competitors to you because the pool of customers is rather stable over the past years. And this has been shown by the very high penetration rate in every market, especially for the mobile services, where we see penetration rate above 100% in most of the countries. So going back to attracting new customers, so this has been allowed by offering bundle services, so a convergent offer. But as you know, most of the time when you subscribe to a mobile and the fixed services from the same operator, you get a discount. So on this end, it means that you have a pressure on the prices, and also we've seen a long-term trend of price declining. I'm going to comment the graph you see right now, but just to show you how the limited pricing power regarding the operators is just going 2 years ago during the COVID crisis, where the demand for the telco services were really high. The player were not able to monetize this high demand. So all in all, we think at Scope that price will continue to erode, slightly decrease on a long-term basis. So this is shown by the graph that you see here. So it's basically data coming from the European Union, and it's regarding the 28 countries, and a display of the different baskets that you see. So one is bundle at the bottom. On the top, you have mobile, and in the middle, you have fixed services. So the number basically relates to the different type of offers. So increasing number means larger amount of data or call minutes that you have, and you can see that basically between 20 and 2021, every type of basket has decreased in terms of price.
Well, that's very interesting, Thomas. So it looks as if indexation might help at the margin, but really at best. But I think there's also the operator's also been looking in other directions to try and grow that top line. And there's this debate at the moment, isn't there, about content providers like Google, Netflix, possibly paying for bandwidth using the telecom network.
Well,
do you think this?
Well, yeah. Let me just finish on the price.
Sorry, go ahead. Absolutely.
Yeah, we just wanted, before moving to that part, give a few examples. Because you have the theory and what's happening, in the real life. So we want to discuss with Jacques two names. So first we have Belgium. So in Belgium, as you can see on the graph here, you have the CPI index that has been increasing drastically in 2022, and the revenue from telecom services has not increased. And we think that even if operator increase their price, the top line will not be affected that much. Just to give you another example from Belgium, so Proximus and other telco operators have been increasing their prices by 6% as of the 1st of January 2023. And when you look at the result, for example, for Proximus for the first quarter of this year, we have also a 6% increase of the top line, but this increase is not related much to prices. This increase is related to the new customer joining Proximus, and I would say out of these roughly 5%, so you have a 5-6% increase of the top line. Less than 2% is related to the inflation and to the indexation of the contract. So that shows you that even when you implement price increase at the beginning of the quarter, you don't have much impact on your revenue. I will let Jacques comment on Magyar Telekom.
Yeah,
Jacques, I think you might be on mute there. Sorry, just hold on 1 second. I think Jacques having problems with his sound there. Just bear with us. Thomas, do you want to perhaps take over and
yes,
talk
sure.
about Magyar briefly?
Sure. So a quick word on Magyar Telekom. It's roughly the I mean, as you know, Hungary has seen a sharp increase in inflation, and the company, the incumbent Magyar Telekom, has implemented prices in this contract that follow this inflation. And what we've seen, like Proximus, is that basically the group revenue only increased by 5%. So that shows you that you cannot, if you pass along most of the price increases, you have a decrease in volume where some customer might switch to another competitors.
Interesting. So again, it just showed the difficulty of making price increases stick in the sector. So perhaps if Jacques, if you're up there, Jacques, perhaps you can tell us a little bit about whether the telecom operators might get more revenue from Google, the likes of Google and Netflix, in terms of their use of the bandwidth that they provide.
Okay. My mic is out.
I think we can just hear you, Jacques. I think let's just go ahead as is.
Okay. So sorry for the inconvenience. There is a lot of debate currently about content provider like Google, Netflix, perhaps being charged to get access to the telecom networks. And this is known as the fair share because there have been reports, let's say, presenting that they have resulted in 50% of the European traffic being due to these content providers. So they should pay for getting this traffic transmitted to the final customer. And there's been a lot of debate, a lot of media coverage on this fair share. EU Commissioner Thierry Breton has even supported this idea, even though he was a former CEO of Orange, at this time France Telecom. And the EU Commission has launched a public consultation. To give you an order of magnitude, the only figure which is on the table is that this Google, Facebook, Amazon, and Netflix should perhaps make a fee of about 20 billion euros to telecom operators, which is roughly 9% of the European telecom revenues currently. So this could have a significant impact. But the ETNO, which is the European Telecom Incumbent Lobby report, is rather convincing because it is not discussing cost and revenues, but just looking at market capitalization for, let's say, the Google ones and the European telecoms. Second, the European Telecom Regulator, BEREC, said in his opinion that there is no evidence of free riding, because in fact customers like us are paying for getting this bandwidth. And finally, at least 5 European countries are opposing this project. So in fact, even the Dutch government say this was some mispresentation of the market. So with all this opposition, the chance that European telecoms get any new revenue are pretty remote. So here again, it's not a way to move up revenues, let's be honest.
That seems clear, Jacques. Thank you. Of course, there is another option that's often put out there when we read chief executives of the telecoms operators in the press and hear the thoughts of investment bankers, and that's a return to M&A in the European sector. Do you think mergers and acquisitions might be a way to boost revenue? Does it ring true?
I'll take this one, Matthew. At the beginning, at least, M&A. I mean, it has been a long topic for the telco sector. So there is different type of transaction that we can look at. So first is European telco operator expanding outside of Europe. This will not be the case in the coming years, because what we are seeing from the European players is basically exiting market outside of Europe. And the main reason for that is the market they used to enter are now mature, and they want to monetize those assets to fund incoming capex that we will discuss about later on. So just to give you a few examples, first you have Vodafone that a few years ago exited Egypt, New Zealand, for instance, and more recently Hungary and Ghana. So just to give you that a sense that European telco operator are focusing on their core markets. We could also mention Tele2 and Telia, the Scandinavian names that are exiting Central Asia to focus again on the core market. So that's the first type of transaction we can look at. Second type of transaction are, for instance, non-European telco operator buying in Europe, European assets. So we think that it will be also limited, like the first type of transaction. The first argument is the maturity, of course, of the European market, but also the fact that government in Europe shows some protectionism, and they want to protect the national champions because they still see this type of company as strategic. So we think that any type of offer coming from outside of Europe is seen as unfriendly. Again, to give you an example, America Mobile, the Mexican operator, tried to acquire KPN, but this transaction was blocked. Again, American Mobile, is a minority shareholder since 2014, a minority shareholder of telecoms.
I think we've lost Thomas' microphone there. Just with us.
Yes, sorry.
We'll try and get
Sorry,
back.
I'm
There
back.
we go.
Regarding the situation in Austria, so American Mobile joined the Telecom Austria group back in 2014 with 49%, with the shareholder agreement where they should not be above 50%. And this agreement was renewed last year between the Austrian government and this company. So that shows you that, I would say this type of transaction is not likely to occur in the coming futures. Lastly, we can talk about transaction intra-Europe. So, for example, a French player buying a German player. So this has been a topic for the past 15 years. We haven't seen much progress on this side. Also, it received some support here and there. We are going back to this protectionism from the countries, and also the lack of economic incentive, meaning the lack of synergy for such a type of transaction.
Thank you, Thomas. If you can hear me properly, we'll continue to discuss M&A, but on a national level, where there have been some significant transactions. If you look at fixed mobile, there has been a lot of fixed mobile mergers over the last 10 years that have been allowed inside European countries. Latest example could be Orange Belgium buying cable operator VOO, which is a good illustration. There are synergies and competition issue remain acceptable, so there have been a lot of deals like these ones. But the number of possible targets, if you looked at the European map, remains very limited now, because all the cable codes that have been available have been sold. I mean, in Sweden, in the UK, in Netherlands, and Portugal. So there is no more target available. So on fixed mobile deals and inside country, no more deal possible. On mobile, there are also synergies that are very real. I mean, getting higher market share on a single network. But here you have a real competition issue, and we tend to believe that this, let's say, opposition coming from competition authority will remain very strong. The European Commission has blocked many deals since 2015 because it assessed that it would lower significantly the level of competition. And also, if they would be allowed, it would require, as a remedy, to introduce a new mobile operator has to be created. This was the case, for instance, in Italy with Iliad. So this position, by the way, I would stress, has been implemented in other jurisdictions. It's not EU specific. In other markets, there has been some of this, let's say, view about limiting the concentration inside the mobile universe. And I would also point that there are some opposition coming from local telecom regulators on that consolidation. And we have seen no change in the Commission point of view and regulation. So there is no reason for us to expect some change in outcome regarding this mobile consolidation inside country. So there are two current projects on the table that are at risk for us: Orange Mobile and MásMóvil in Spain, and Vodafone 3 in the UK. All in all, on a prospective view, we see more disposal in facts like foreign assets, as pointed by Thomas, like towers codes, than a real acquisition. M&A, in fact, is more an opportunity than a threat from a credit point of view.
Very interesting, Jacques. So my next question to you then is, if growth is proving so hard to find, does that raise questions about how easy it will be for the operators to finance investment in new infrastructure and new technology, assuming indeed that capex is going to be significant?
I think you're right, Matthew. Capex is one of the main, let's say, debate on the table for the sector, and telecoms are often presenting themselves as heavy investor in new technology. They have been presenting 5G, fibre, like high-tech things. But let's take a look at this chart, which is one of my favorites, which is the telecom capex in France, where the regulator is publishing very good a set of statistics. The blue bar is a mobile capex in France over the last 16 years, and the orange part is a fixed part. Let's focus first on the mobile. If you look at 5G, you see no pickup with the introduction of mobile. You can see that over the period, mobile investment is pretty stable, around 2.7 billion per year. And that what is generating growth, we'll discuss that later, is a fixed part with fiber. So mobile capex remains stable because 3G replaced first, 2G, GSM, 4G replaced 3G, and now 5G is just replacing 4G. There are some price declining equipment that explain also the stability and the increased capacity of each generation of new equipment. All in all, mobile capex remain stable over the last 16 years, while at the same time, data traffic was multiplied by 75,000 times over the period, and it remained stable. And by the way, also, the market went from 3 mobile operator to 4 within 2012, the introduction of Free Iliad mobile venture. So it is also, by the way, a good illustration of the fair share debate. There is a strong increase in traffic volume, and it did not generate any increased capex. And perhaps also a last point, 5G license have been acquired at a very reasonable France. And just taking the France as an example, over the last 15 years, spectrum spending has been around 10 billion, whereas the total capex for the sector was around 113 billion. So spectrum is on the side of still mobile. It is not a big threat for the sector.
Interesting, Jacques. But as that chart shows, the central capex question revolves around fiber. But if I turn to Thomas now, we know that fiber rollout is pretty advanced in many countries. Where is it still a challenge, and why?
Well, when we talk about fiber rollouts, the picture is pretty uneven between the different European countries. You can see on the graph here that between, for example, on both ends of the spectrum, you have large discrepancy between, for example, Spain and Belgium or Greece. And it is because that even if some operators publish fiber numbers, we have to distinguish that between the different type of fiber. And we must admit that not all fiber are equal right now. So just to give you another example, so BT in the UK has rolled out for many years fibers, but this was not 100% fiber. It was not FTTH, so the fiber going until the endpoint. It was mainly FTTC or FTTB. So part of this telecommunication was still using the old copper network. So the graph that you see here is FTTH, and you see that a lot of countries are lagging behind, and exhibit poor numbers. So they will still need some large investment to be made. Now they try to delay those type of investments, but now what we've seen is political and regulatory pressure from government and regulatory bodies, to develop, a strong offer of FTTH, and this push, this incentive is mainly for what we call white areas. This is outside of city, rural areas where the economic incentive for telco operators is really low because you have less customer and a higher cost of rolling out the fiber. So there are still some large MNO that will have to implement large capex with regard to fiber. But at Scope, we want to emphasize the fact that even if it's the case, we think that free operating cash flow will not deteriorate, will not decrease that much. They will still remain positive, in line with the past years, and there are many reasons for that. The first reason is that the operator are able, to manage the increase and to ramp up the fiber rollout, gradually, and it's not a drastic increase from one year to the other. So it's more a smooth increase over the years. So that's the first point. The second point is that they are able, to mitigate those investments by reducing or canceling the dividend, so less shareholder remuneration. It was the case, for example, for BT, that 2 years ago cut out the dividend for the first time in the past 30 years. So a big a big move. We should not on the side that the telco operator don't do a lot of share buyback, so that's also preserve the free operating cash flow. The only name that we can think about is KPN, that we doing share buyback, but just small numbers. And the last part, they are able to monetize their assets, that we have seen the trend over the past 5 years, selling towers. So that's also a way to fund the upcoming capex. And lastly, another option is to deconsolidate the capex, where you put some of your assets, so tower or either the fiber network, into JV. So it means that even if the company will invest in fiber, this will not show in the consolidated figures. So it might be a little bit of window dressing, but on the consolidated basis, again, the free operating cash flow and the free cash flow should be sustainable going forward.
Well, that's been a very good overview, but I know that Jacques would just like to say a few words in terms of finding sort of a good snapshot of the sector, and that relates to our latest public rating in the telecoms arena for Hungary's 4IG. So what sort of we'd be interested to know, Jacques, what sort of trends that company's recent history illustrates.
This is quite a good illustration of our coverage. With 4IG, we changed our rating recently, which was upgraded in January from a single B plus to a double B minus, following the acquisition of Vodafone Hungary, which was a big move for the company. And the main driver was clearly on the business risk profile of the BRP, which was improved by one notch to a triple B minus. What you can see on the pie above, the market share of 4IG was through his Digi subsidiary, and they had a 2% market share in mobile. With the acquisition of Vodafone, the 4IG market share was in a combined manner at 29%. So a big improvement. This is a key improvement in an industry characterized by stability of market share and margins. And also you can notice that broadband market share also was a big change with 4IG market share, combining Vodafone and Digi, moving to 43%, becoming the market leader, by the way, above the incumbent Magyar Telekom, a rather unique situation in Europe. So this was the main driver for the upgrade of our rating. There was also an improvement on the financial side. The FRP, the financial risk profile, was improved by one notch also to B plus due to some equity financing provided by state-owned holding and some minor asset disposal expected after the acquisition of Vodafone Hungary. So this is to present our latest rating change in the sector. And I think we have covered what we wanted to present you, and we are ready for any further questions.
Thank you, Jacques. Thank you, Thomas. Look, we've got a couple of questions in. The first one, someone points out, Jacques, that you highlighted Sweden as a country, which is a good example of trends. Are there other countries in Europe which sort of show opposite trends, which do indicate there might be growth hiding out there for telecoms operators?
Well, unfortunately, we've not been able to see any, let's say, strongly different trends in Europe. The main reason is that there is no longer any significant volume effect in a new customer for let's say either broadband. Now it's growing about 2% per year, or mobile. Everybody has a mobile phone in Europe, as you know. So in all the markets where you've got reliable statistics, there are very similar trends. So no big reason. And I would like to point also to another Scandinavian market, Finland, which is a little bit ahead of the market, because in Finland, mobile data usage per mobile phone is at let's say a very, very strong level. It's a world record. It's about 30 gigs per month. The average in Europe is closer to 9 gigs. I mean, so it's, let's say, 3-4 years ahead of what we see in most European countries. And even in this country, with this incredible level of usage of mobile data, you see no increase in revenues. In fact, if I remember well, 2021 figures was still a decline in total telecom revenues in Finland. So I don't think any existing cases where I would see very different trends. Let's say that would be a counterexample to the Sweden example we are using.
Oh, well, that Finnish data is quite sobering. By the same token, I see somebody else has mentioned posing this question, also on growth. What about all this investment in fibre? Will that not change the growth profile of the European sector?
Well, there's, I think, 3 ways to try to assess that and what could be the future impact. First, let's look back to the move to the let's say previous generation of internet access, moving to dial-up access to broadband, i.e. DSL at this time. And if you look at what it generated, you paid for your DSL line exactly the same price for what you were paying for your dial-up access. So in the end, it is very similar in terms of pricing level. So it did not deliver any increased revenue in terms of a higher average revenue per user. Then let's take a look at Sweden, which is now, as pointed in one of the previous charts, one of the world record in terms of fiber usage in Europe. Around, I think, 80% of the customers are using fiber. Moving 10 years ago, something like that, it was 10%. So they moved to 10% from 80% of the customer base using fiber, while the total broadband growth was growing, let's say, around 3% per year. But the total revenue for broadband grew over the same period around 3.2 or 3.5%, sorry, around the same period. So the impact of having more fiber did not deliver any real addition to the revenue base. So let's not expect similar things. Let's expect some similar trends in most European markets. And also, finally, there's a big cost reason. The cost of fiber is, from a network perspective, is pretty similar to the cost of copper. It's digging the pavement. So whether you put fiber or copper, it's the same thing. So why the service price should be different? There is no single reason. So in the end, we tend to estimate that the increased usage of fiber in broadband will not generate increased revenue, unfortunately, for the industry, and there are good reasons for that.
Well, on that, again, sobering note, Jacques and Thomas, thank you both very much for your time today. I think we've had a great discussion. I'd like to also thank everyone who's taken part in this call for your time. It's been great to have you with us. As I said, we'll distribute the slides after the call. And with that, all it leaves us just to say goodbye. And thank you for joining us.
Goodbye.
Goodbye and thank you. Bye-bye.
Thank you. Bye.
Thank you all.